This is CGTN, China Global Television Network.
Hello there and welcome to Global Business Africa. We'll be giving you insight into Africa's business and financial markets. I'm Uche Okoronkwo, coming to you from Kenya's capital, Nairobi. Let's start with a look at the markets. Now, the positive start to the year continues as markets push Omicron worries to the side and focus on supply. Now, traders say travel and leisure stocks jumped more than 3% today, reflecting expectations that Omicron's impact on the industry will be less severe than initially feared. In emerging markets, stocks firmed for the fourth straight session, with MSCI's index climbing 0.2% on the day. South Africa's JSE saw all major indices up, with industrials and resources leading the day. Now, also coming up on today's show. Protests in Sudan scuttle economic reform plans. We'll have in-depth analysis on the developments in Khartoum. Egypt's exports hit a record high of nearly $31 billion in 2021. And OPEC and its allies agreed to stick to a planned increase in oil output in February. Well, we begin today's show in Sudan, where security forces on Tuesday fired tear gas at anti-military protesters in the capital Khartoum. That's according to witnesses. Protests in various cities are focused on keeping up the pressure on the ruling military following the resignation of civilian Prime Minister Abdallah Hamdok. Now, activists said that authorities closed roads in the capital and its twin city of Omdurman in an effort to prevent demonstrators from reaching key government buildings. Hamdok, who was deposed and put under house arrest in an October 25 takeover, had returned to government on November 21st under a deal signed with military leader General Abdel Fattah al-Burhan. But pro-democracy protesters who had denounced the military's power grab also rejected its deal with Hamdok. Well, let's discuss these developments on ground and, of course, how they're impacting the country's economy. We're joined by Patrick Heinisch. He is an economist for emerging markets at Haleba, which is a German commercial bank. Great to have you on the show with us today, sir. Now, of course, the resignation of Prime Minister Hamdok has clearly put Sudan's revolution in jeopardy going forward. Hamdok himself has warned that this could be a turning point and suddenly threaten the very survival of the country. So what are your views on the extent to which this will damage Sudan's economy?
Hello, good evening. Thank you for having me. Well, first of all, from an economic point of view, the administration of Prime Minister Hamdok was relatively successful. Hamdok's administration managed to re-engage with the international community after 30 years of international isolation, and the key achievement was definitely the decision point of the heavily indebted poor countries' debt relief initiative. So economic reforms started to bear fruit, and that's what we can see in the data for the third quarter of the past year, 2020, so the quarter preceding the military coup. We can see in these data that foreign exchange inflows reached more than $900 million just in the third quarter. This was an all-time high for Sudan. And now much of this was aid money, and the coup puts these achievements now at risk. The US already announced a suspension of $700 million in aid to Sudan, and international financial institutions also suspended their aid programs. The coup may also have negative consequences for foreign direct investment. In May, Prime Minister Sudan presented investment projects worth several billion US dollars at the Paris Investment Conference. And now foreign investors will be much more reluctant to tap the Sudanese market.
Right.
We do not have yet data for the last quarter of 2021, but my guess is that we will see a significant drop in foreign exchange inflows.
Well, Patrick, we know foreign donors, as you mentioned there, they cut off funding following this year's coup. The finance ministry now says that they plan to depend on internal resources going forward. They also ask Persian Gulf allies to help them with some financial support. What are your thoughts on that? They've not heard back from these Persian Gulf allies. How do you think then the government will be able to support itself going forward?
Well, as far as funding from Gulf countries is concerned, there is pretty much uncertainty around these funds. So they seem to go largely unaccounted in the central bank statistics. So it is difficult to gauge their impact on the budget, to what extent they finance the budget. And they are also largely controlled by the military. As far as domestic resources are concerned, you know, Sudan's domestic revenue base is very low. Sudan only collects tax revenue of 6% of GDP. Even among African countries, this is a very low tax revenue ratio. So the domestic revenue base is very much constrained, and the only way to somehow manage or finance the budget seems to be a cut in expenditure. So on the revenue side, I do not see much potential for an increase in revenue. The domestic revenue component is not an option, because in a low-income country, you cannot easily increase taxes.
Certainly a tight situation. We do have to leave it there, Patrick, but thank you so much for joining us on the show today. That, of course, was Patrick Heinisch. He's an economist at the German Commercial Bank. Now, of course, Sudan returned to the global financial system this year after decades of isolation from global markets. Its removal from the U.S. state sponsors list of terrorism list, in December 2020, set in motion its reintegration into the global economy. But as Naba Mohidin now reports from Khartoum, a military takeover in late October has pretty much frustrated economic reform efforts.
For years, Sudan has struggled with an array of economic woes, including a huge budget deficit, widespread shortages, and soaring prices for essential goods. Conditions worsened after the oil-rich South seceded in 2011, after decades of war, taking with it more than half of public revenues and 95% of exports. The declining economy led to the ousting of then-President Omar al-Bashir in a 2019 popular uprising. World Bank President David Malpass visited the country in September, the first visit by a World Bank president to the East African nation in more than 50 years, to lend support to efforts to revive its economy. But a military coup just 1 month later has thwarted these plans.
Sudan had put great hopes on financial aid from international institutions and donors. The halting of aid will have impacts, and it will soon reflect on the annual budget.
The World Bank and US announced they had halted financial aid to Khartoum, in a huge blow to the country's economic reform program. But independent analysts are hopeful for the future.
The international community has negatively reacted to the October the 25th coup, but now it's returning to deal with Sudan, and I expect that relations will be fully retrieved by the beginning of the new year.
Amid cautious return to the international community, Sudan's economy is still struggling. Economists predict a jump in the inflation rate, soaring prices, and food shortage that will affect 14 million Sudanese people next year.
Earlier this year, Sudan cleared the final hurdle to securing much-needed relief through the IMF World Bank Highly Indebted Poor Countries HEPIC initiative, with $1.4 billion bridge loans to clear Khartoum's arrears to the fund. The country's foreign debt is estimated to be $60 billion. Sudan hopes the resumption of financial aid will help in the recovery of the overwhelmed economy and improve the lives of people living here. Naba Mohidin, CGTN, Khartoum, Sudan.
Well, let's shift focus to Nigeria now, where the parliament has approved a spending plan of about $42 billion for the 2022 fiscal year. That's over $1 billion more than what the president had presented for approval. Of course, it's by far Nigeria's most ambitious budget, about 25% higher than the previous year. Now, with an oil benchmark of $62 per barrel from $52 presented by the president. Well, according to CGTN's Kelechi Mekalam, it has raised some concerns in various quarters. She now reports.
Nigeria's President Muhammadu Buhari signing the nation's 2022 budget, which he's tagged the budget of economic growth and stability. The National Assembly raised the figure from about $40 billion, which the president earlier presented to it in October 2021, to $41.8 billion. And that's unsettling for President Muhammadu Buhari.
I must express my reservations about many of the changes that the National Assembly has made to the 2022 executive budget proposal. The 2022 budget will be the last full-year budget to be implemented by our administration. Its effective implementation is very critical for delivering our legacy projects, promoting social inclusion and strengthening the resilience of the economy.
Nigeria's economy is largely dependent on crude oil. Although crude oil accounted for an average 9% of its GDP in 2020, a third of government's revenue came from its sales. It also makes up 90% of the country's export earnings. Lawmakers decided to increase the oil benchmark from $52 to $62.
In the context of the reality on ground, COVID is still plaguing the world. Every day we have different variants of it. Many economies are shutting down again, and yet we are projecting. The US has stopped buying Nigerian crude for a while. As it stands, our fate is hanging in the air when it comes to crude sales. And yet we are still making such unrealistic projections. We need to be careful with that.
Already, about 22% of the approved budget will go to servicing debts, 8% to statutory allocation, 40% for recurrent expenditure, and 30% is being set aside for capital projects.
The best pattern should be that at least 50% of your income or projected income goes into capital expenditure. And that is what lubricates the economy. That is what engenders growth. That is what engenders development. That is what promotes infrastructural development, industrial development, and all of that. But when that is not done, then we begin to ask the question, what is the intention? What do they want to achieve with this kind of budget?
Economic watchers advise government to utilize available internally generated resources for revenue generation, to cut down on government's expenditure and allocate resources based on core national needs in order to avoid heavy borrowing and poor budget implementation. Kelechi Mekalam, CGTN, Abuja, Nigeria.
Now, in Somalia, leading telecom firm Hormuz is marking its 10th anniversary since launching its mobile money transfer service EVC+. Over 70% of Somalia's 15 million are now using the platform to transact daily business, making it one of the fastest growing cashless populations on the continent. Well, CGTN's Mohammed Kahir reports from the capital, Mogadishu.
Ahmed Noor Abdi, the manager of Fast Grow store in Mogadishu, is keenly serving his customers without any concern about the payment. With the help from Somalia's biggest telecommunication firm Hormuz, thousands of businesses like his are enjoying the benefits of EVC Plus mobile money payment service for the past decade.
The EVC Plus money transfer has boosted our business by making the transactions with customers easy without challenges. But before the service was introduced, there was a lot of risk in carrying huge amounts of cash, and it was difficult to verify counterfeit money. The EVC system has omitted that concern now.
According to Hormuz, transactions worth more than $5 million are conducted daily using EVC Plus mobile money transfer platform, as the company with over 8 million subscribers aims to expand its free services in the Horn of Africa region in the near future.
Hormuz Telecom is planning to have business partnership with other Eastern Africa telecom and banking companies so that we can interconnect our services in order for them to have market share, hereby introducing their services. And the same way we want to penetrate in their markets to introduce our products to our bigger population in the region, because we believe business nowadays don't have border restrictions.
Currently, over 70% of Somalia's 15 million population use mobile money transfer services, making it one of the fastest growing cashless communities in the world.
Since its inception 10 years ago, Somalia's leading mobile money transfer ETC Plus has transformed lives by creating jobs and enhancing business activities with no charges for sending and receiving of money. Mohamed Kahil, CGTN, Mogadishu, Somalia.
Well, let's move on now to other corporate headlines today. Telkom has introduced the T-Cash app, which is an application that will enable customers to access a range of services on its digital financial services platform. Now, T-Cash mobile money is designed to simplify making payments and enable users to access money on the go. The T-Cash app, which can be downloaded from the Google Play Store, the Huawei App Store, as well as the Apple Store, is a strategic addition through which Telkom customers will access T-Cash. Meanwhile, Sanlam's attempt to increase its stake in a Moroccan general insurer has not materialized, and that's due to all conditions not having been met from the relevant regulatory authorities in both South Africa and Morocco. In May 2021, Sanlam announced a proposed acquisition by San JV, which is a special purpose vehicle held jointly by Sanlam's wholly owned subsidiary, for about $125 million. And BlackBerry is pulling the plug on service for its business smartphones, which were touted by executives, politicians, and legions of fans in the early 2000s. The move marks the end of an era, as the phones, which sported a tiny QWERTY physical keyboard and the BBM instant messaging service. Former U.S. President Barack Obama made headlines in 2016 when he was asked to give up his BlackBerry and replace it with an unnamed smartphone. Meanwhile, Apple has become the first company in the world to hit $3 trillion in market cap, and that's thanks to investor confidence that the iPhone maker will keep launching best-selling products as it explores new markets such as automated cars and the metaverse. Now, Apple's march from $2 trillion to $3 trillion in market value took about 16 months as its stocks roared higher. On the first day of trading in 2022, the company's shares rose to 182.88, setting a new record. And that's a look at our corporate headlines. Well, let's now head into a short break, still to come on the show. Egypt's exports hit a record high of nearly $31 billion in 2021. And the DR Congo set to cut its interest rates in 2022.
The world economy as we know it is about to change. Global business reports highlight emerging markets, developing countries, and dynamic sectors worldwide. We feature top analysts and newsmakers to provide perspectives on every facet of business. From an on-the-ground perspective, we provide you with balanced and objective assessments. Fast, sharp, and insightful. Global business, only on CGTN.
So this is it. I'm just about to be shot.
Tense here. Bottles are being thrown. As they do so,
there are about 3 critical bridges here in Malawi. That's one of them. We're going to cross that bridge.
As you can see behind me, police forces
who are replying with gas. Gas just came in.
Gas. So it's all begun now.
Divisions leading the charge into West Mosul have brought us here.
Just gotta be careful here with some gunshots.
This is where most of the fighting has been concentrated.
Is the front line now after 9 days of fighting?
We're about 2 to 3 kilometers from the front
clear
line.
view of this front line position.
There's more to this place than just glorious landscapes. There's more to it than just, say, Table Mountain or glorious, endless salt flats. There's more to it than countries that are home to some of the deepest mines in the world. There is so much more to this place, even if it is home to some of the finest diamonds on the planet. It is the sheer diversity of the people who call Southern Africa home and the relentless drive to make it a better place that make it so special. And we know that because this too is home. No one knows Southern Africa like we do. CGTN, see the difference.
Well, let's go to Egypt now. The country achieved a high record of exports in 2021, and that's despite the global coronavirus crisis. According to the Egyptian Prime Minister, exports hit nearly $31 billion last year, and that's the highest ever in the country's history. Here's CGTN's Yasser Hakim with more from Cairo.
There's been a gradual global recovery in international trade in 2021 compared to COVID peak year 2020. But quick rebound in Egypt's exports has been eye-catching, jumping from $26 billion in 2019 to a record $31 billion in 2021.
We managed through a financial package led by the Egyptian president, which is £100 billion, about 2% of GDP. We managed to support economic activities affected by the crisis like the tourism sector, small and medium enterprises and manufacturing. Egypt was the only country where national and mega projects didn't stop and continued at the same rate in spite of the pandemic.
This guaranteed continued manufacturing at full capacity during the pandemic. It also allowed markets to import more Egyptian products as an alternative to the shortage in supply from other countries. One industry that has seen an impressive 46% increase in exports are chemicals. Businessman and head of the Export Council for Chemical Industries, Khalid Abul Makarim, attributes this success to state support.
It was the export support program. The state subsidized exporters and waived taxes and tariffs on raw materials in 2020-2021, which had a huge impact on increasing our exports. When the subsidy money was released to the companies, it helped us a lot in paying off any debts. Many factories were able to cover their bank loans, to pay their suppliers, their workers, and there was liquidity to buy raw materials, increase production, and open new markets.
Abul Makarim says another vital policy which kept exporters operating is the state's strategy to locally produce raw material, industrial components, and establish feeder industries.
Having local components available in Egypt during critical times was crucial for us, and therefore our factories did not stop production. Before, we used to import raw materials at high costs, as well as the shortages of delays and shipping complications during the pandemic. Now we have the raw materials and components locally supplied to us immediately. So we continued production, we continued to operate, and our manufacturing will continue to increase.
Exports that flourished included fertilizers that jumped by 50% year-on-year, agricultural products, chemicals, plastics, and medical equipment. The government has also helped exporters enter new markets with free trade agreements like the Mercosur states, as well as the focus on Africa.
We have a new strategy 2022-2025 towards Africa especially that we chair the COMESA. In the next 3 years, I expect our exports in the continent to grow by 30% every year. The state subsidizes our shipping costs to Africa by up to 80%, which makes it very attractive for any businessman to target Africa, as 80% of his transport costs will be covered.
The government hopes these incentives will keep exports increasing and give a boost to the economy as a major source of hard currency for the North African country. Yasser Hakim for CGTN, Cairo.
And the Democratic Republic of Congo Central Bank expects to cut its main interest rate in 2022 from 8.5% to 7.5%, and that's following a period of macroeconomic stability. Now, according to the bank, the economy recovered strongly from the impact of the COVID-19 pandemic in 2021, growing by an estimated 5.7%. Growth is projected to rise to 6.1% in 2022. Inflation was estimated at 5.1% in 2021 and is projected to remain around 5% in 2022. Now, the head of the International Monetary Fund last month called the DRC a rare bright spot in Africa's economic performance, owing to high commodity prices and government reforms that have helped to improve public finances. Meanwhile, in Senegal, President Macky Sall has laid the foundation stone for the construction of a $1.13 billion deepwater port just south of the capital, Dakar. Now, the port, which is being developed by Dubai's state-owned port operator, DP World at Ndayane, is the biggest private investment in the West African nation. The project is a joint venture between DP World and the Port Authority of Dakar. Its first phase will include 840 meters of quay and a 5-kilometer marine channel designed to handle 366-meter vessels. The second phase will add 410 meters of container quay and further dredging to handle 400-meter vessels. Now, President Sall says this new port will bring greater economic growth, prosperity, and also jobs to the country. Moving on now, Chinese State Councillor and Foreign Minister Wang Yi is visiting Eritrea, the first stop of his first overseas trip this year. Well, our reporter Wang Bo tells us what to expect from that visit.
Starting a New Year's work with diplomatic visits to Africa has been the tradition of Chinese foreign ministers for 32 years. And this year, Wang Yi will be visiting 3 African countries during his 4-day trip that starts on Tuesday. He will be going to Kenya, Comoros, after Eritrea. Wang's visit comes after the 8th Ministerial Conference of the Forum on China-Africa Cooperation. According to Chinese Foreign Ministry, this trip means to promote the implementation of the outcomes of the conference, dovetail new measures for cooperation, support African countries to better deal with COVID-19, and achieve economic recovery at an early date. China and Eritrea established the diplomatic relations in 1993. Since then, the two countries have maintained a sound relationship. In November 2021, Eritrea signed the Belt and Road Initiative Memorandum of Understanding, becoming one of the latest countries to join the initiative. During his visit, Foreign Minister Wang Yi will meet with the country's president and his Eritrean counterpart. Wang Bo, Asmara, CGTN.
Now, China's support to Eritrea goes back several decades, starting with the Eritrean liberation struggle. The two nations established diplomatic ties in 1993, which is the same year that the Horn of Africa country gained its independence from Ethiopia. Yes, CGTN's Daniela Pearson taking a look at their current economic ties.
China and Eritrea's friendship is grounded in principles of non-interference and safeguarding sovereignty and independence. On the development front, China has financed a number of projects. In 2007, China and Eritrea signed economic deals which included the removal of tariffs on Eritrean products imported to China, the partial cancellation of Eritrea's debt to China, and an extension of Chinese technical assistance to Eritrea, particularly in the health sector. More recently, since 2018, a Chinese-made solar power plant has been helping Eritrea access green energy. It produces an average of 11,000 kilowatt-hours of electricity per day. Eritrea has one of the lowest electrification rates in the world. The capital Asmara's unlimited supply of clean energy is able to help boost the country's economic development. In 2021, Eritrea became one of the latest countries to join China's Belt and Road Initiative, marking a new chapter in relations between the two countries. Chinese Foreign Minister Wang Yi met the Eritrean Foreign Minister Osman Saleh Mohammed in Dakar in November last year during the Forum on China-Africa Cooperation. The two top diplomats hailed Eritrea's joining of the BRI as an opportunity to deepen cooperation in fields such as ports, energy, infrastructure, agriculture, and mining. Daniela Pearson, CGTN.
Now, South Africa is accelerating efforts to clear bureaucratic red tape that continues to squeeze the life out of small businesses who are struggling to recover from the COVID-19 pandemic. South Africa has one of the best tax systems in the world, but it is quite complex for SMEs. So what are some of the impediments to starting or running a small business in South Africa? Yes, Sumitra Naidu finding out.
Research shows that small businesses have the potential to address unemployment and help grow the economy. But in South Africa, entrepreneurs are faced with a list of hurdles before and after starting a business.
Aside from it being administratively intensive, there's also a financial burden imposed on those small businesses. From a red tape perspective, the tax law amendment bill passed early this year actually speaks more to creating more red tape and making that burden heavier.
South Africa's unemployment rate hit a record high of 34.9% in 2021. Job opportunities are few in a struggling economy. More young people are starting their own enterprises to make a living, but so many are running into trouble.
Finances are obviously an issue for SMEs, and to ask every single SME, no matter how newly formed the SME may be, to actually then incur further accounting costs to ensure that everything is properly managed. But at the end of the day, that burden still falls on the taxpayer itself, so on the SME, on its members, on its directors. But very much from that perspective, you're looking at fines, maybe a bit of prison time.
According to Stats SA, in March 2021, 216 companies have been liquidated, a 21% jump from the previous month. While COVID was a factor, closures were also due to non-compliance.
Non-compliance becomes very dangerous because failure to obviously satisfy that with SARS means you're non-compliant, which means your debtors won't pay you money that's owed, and nobody will really want to do business with you in terms of suppliers, because suppliers do typically request a tax clearance certificate. And without that, you are basically dead in the water.
Government has committed to make it easier for small businesses to start, grow and compete. While some small businesses are feeling optimistic, they will need to prepare themselves for the hard work that lies ahead. Sumitra Naidu, CGTN, Johannesburg, South Africa.
Meanwhile, South African consumers are getting some relief early in the new year, with fuel prices set to fall on Wednesday. Now, the Central Energy Fund announced that the retail price of petrol will be cut by 71 rand cents per litre, and the wholesale price of diesel will be lowered by 67.8 cents per litre. Now, local fuel prices are determined by international oil prices as well as the dollar-rand value, as South Africa buys its oil in dollars. In 2021, the price of oil saw its biggest annual gain in more than a decade, and that's thanks to accelerating economic growth and fuel demand as lockdowns were downgraded across the world. Meanwhile, Tunisia's tourism revenues rose 7.7% in 2021. That's compared to the same period in 2020. According to the country's statistics agency, the tourism-dependent North African nation earned approximately $732 million from the sector during the year. Well, CGTN's Adnan Shaushi has the latest on that data from Tunisia.
The National Tourism Office in Tunisia announced that some 2.2 million tourists visited the country last year, including 1.8 million foreign visitors. The COVID-19 indicators had improved during the summer and autumn of 2021. As a result, many foreign countries lifted travel restrictions to Tunisia.
The tourism department launched many initiatives and projects to revive the industry in 2021 as the health situation improved. Our objective is to resume a normal activity after the pandemic and to achieve growth in tourism in terms of quantity. The Tunisian destination has a rich natural, historic and cultural heritage.
Despite some positive indicators, tourism professionals say that the repercussions of the pandemic on the sector were disastrous. This has forced tourist resorts to come up with new products and services to attract tourists from Gulf countries, Europe, Asia and North America.
The coronavirus crisis paralyzed tourist activity across the world. Tunisian tourism was hit hard, yet new tourist resorts are opening in the country. These facilities will offer different services and will not be crowded. We are adapting to the constant changes in tourism market trends. International tourists don't like crowded destinations due to the risk of COVID-19 infection.
Experts assert that tourists are looking for an inclusive tourism package, which includes leisure, safety and security when traveling to Tunisia. In a bid to boost more tourist arrivals, Tunisia's tourism department is promoting the country as a safe destination.
Recent statistics show that some 83% of tourists are looking for alternative and sustainable destinations. Tunisia offers this service, which naturally respects social distancing and prevention measures. Tourists no longer want to stay in closed compounds and tourist resorts, where the risk of infection with coronavirus is higher.
The Minister of Tourism announced that the government of Najla Bouden will facilitate the administrative procedures to boost investment in this vital sector. Tourism employs more than 400,000 people in Tunisia. Tunisia was among the first countries to introduce a health protocol for tourist facilities in May 2020. This protocol is reviewed regularly by the health department. The North African state aims to attract 5 million tourists in 2022. However, experts believe that the new COVID-19 variant could impact travel plans this year. Adnan Shawishi, CGTN, Tunis.
You're watching Global Business Africa. Let's take a short break now, but still to come on the show. OPEC and its allies agreed to stick to a planned increase in oil output in February. And Turkey's annual inflation rate jumps to its highest level in 19 years. Change is on the horizon. Through the shifting of time, Africa's emerging tech landscape is creating new channels.
There's a hunger for local African content globally.
Shaped by innovation, carved out by a new generation of digital entrepreneurs, sculpted by a mobile revolution, and trickling down to the most remote corners of the continent. TechSpot is seeking out the new concepts in technology, disrupting Africa's traditional sectors.
You're watching breaking news on CGTN.
Welcome to the world today on CGTN.
Business in Africa is at a crossroads. We celebrate those who are adopting and thriving despite the challenges, from grassroots to big businesses. Global Business takes you along for the ride as we track the making of a giant.
Only on CGTN.
And now here's a quick recap of today's top headlines. Sudanese security forces on Tuesday fired tear gas at anti-military protesters in the capital Khartoum. That is according to witnesses. Now, thousands of protesters gathered across various cities in Sudan days after the resignation of the country's civilian prime minister. Now, witnesses said that streets leading to the presidential palace and army headquarters were sealed off amid heavy security presence. Protesters are now calling for the disbandment of Sudan's ruling council, headed by military leader General Abdel Fattah al-Burhan. And the man the South African state has accused of burning the country's parliament on the 2nd of January made a brief appearance in the Cape Town Magistrates Court today. The inferno, which started in the early hours of Sunday morning, destroyed the historic National Assembly complex and caused extensive damage to the old assembly building. Now, firefighters battled for 2 days to bring the fire under control. And Mozambican President Filipe Nyusi and his wife Isaura Nyusi have tested positive for COVID-19. A statement from the office of the president issued Monday also says that they were both on routine checkups during the diagnosis. President Nyusi and First Lady are now under quarantine and are asymptomatic. The Mozambican government says the Omicron variant has become the dominant strain during the country's third wave of the pandemic. And that's a recap of some top stories this hour. Now, OPEC Plus has decided to raise its output target by 400,000 barrels per day from next month. That's as it expects the Omicron coronavirus variant to have a short-lived impact on demand. OPEC Plus has raised its output targets each month since August by 400,000 barrels per day. It is unwinding record production cuts of 10 million barrels per day that were made in 2020 as demand and prices recover from the pandemic-induced slump. Now, the United States has urged the group to pump more crude to help the global economic recovery from the pandemic and also to cool prices as they trade near $80 a barrel. And the Turkish lira slid as much as 4% against the dollar on Tuesday, and that's as Turkey girded for inflation to rise further after touching a 19-year peak, even as President Recep Tayyip Erdogan said the worst of the economic turmoil was left behind. Here's CGTN's Mikhail Bardavid with more from Istanbul.
On Monday, Turkey's Statistical Institute announced December's inflation figures. According to the Statistics Office, Turkey's annual inflation rate jumped to 36.08%. That's the highest level in 19 years, and it's also higher than market expectation. A critical increase for Turks has been in food prices, which saw an annual surge of 43.8%. In the meantime, Turkey has been battling with a currency crisis. Turkey's central bank has been carrying out an unorthodox monetary policy of cutting interest rates to fight inflation. It has cut rates 4 months in a row now. The central bank has been under pressure to do so by Turkish President Tayyip Erdogan, who has described interest rates as the mother of all evil. Erdogan believes low interest rates will boost growth and encourage investments. However, every time the central bank cut rates, the Turkish currency lira took a hit. Though the lira recovered some of its yearly losses following an announcement of a monetary scheme to protect lira investors against currency volatility on December 21st, the lira lost about 43% of its value in 2021 and ended the year as the worst performing currency among emerging markets. Much more negative data was announced by the independent inflation research group made up of academics and former government officials who declared the yearly inflation rate as 82.8%. Turkey's central bank is expected to hold its next rate decision meeting on January 20th. I'm Mikhail Bardavid for CGTN in Istanbul.
Meanwhile, the United Nations Conference on Trade and Development says that the Regional Comprehensive Economic Partnership will promote foreign direct investment flows amongst members in the region. Now, the UN report shows that the RCEP members, such as China and ASEAN countries, attracted nearly a quarter of the world's foreign direct investment in 2019. That is despite the global stagnation in FDI flows. Now, RCEP members have adopted a negative list in the non-service sectors such as manufacturing, agriculture, forestry, fishing and mining. They've also removed measures that discriminate against foreign financial service providers. Here's Zhang Shushuan taking a deeper look at that report.
As a major Asia financial center, Singapore was a standout among the first of the 10 member nations to see the agreement take effect on January 1st. It was the first ASEAN country to ratify the RCEP agreement last year. And financial institutions headquartered there are now finding the details a lot more than just interesting. As the first Singapore-based asset management company to be approved for dealing on the China interbank bond market, Fullerton Investment Management now operates a wholly foreign-owned entity in Shanghai. Its investments here were clocking an annual return of 17.7% as of the end of last July, and the company is expecting even more under the new agreement.
There's a great demand in China for multiple asset management products with stable returns, but things are still in their early stages of development here. Foreign invested asset management companies like ours have advantages in dealing with these products. Currently, assets available for allocation in China are still less than those in foreign countries. But the RCEP taking effect here should mean there will be more financial tools and asset products for investment, and that should help boost asset allocation.
Given the agreement scope, the 15 signatory countries account for about 30% of the world's total population and gross domestic product. Few would question its potential contribution to the global and regional economic growth. The RCEP is China's first free trade agreement in which investment chapters are in a form of negative list. Under the agreement, at least 65% of the services sectors will be fully open to foreign investors. And investment banks headquartered outside those 15 nations are now looking pretty interested too.
Though EBS headquarters is not in Asia Pacific, we do have a large footprint in the Asia Pacific region. So this is something we are very fascinated about the RCEP, which can help us as a bank with a large footprint in Asia Pacific. The key we are expecting is a lot of capital flow that will definitely go multiple times from now. Capital flow crossing border between China and the rest of the Asia Pacific region.
It's already been 15 years since UBS Securities opened in China. And since then, it has helped Chinese corporates raise more than 730 billion yuan in domestic capital markets. With the RCEP now taking effect, Lin says the company will also be focusing more on cross-border business as well. China's acceleration in the opening up of its financial markets in recent years has created a good foundation for the changes and opportunities brought about by the new agreement. In 2020, the regulator lifted restrictions on foreign ownership in securities, futures, and fund management firms. And foreign institutions are now treated equally with domestic peers in terms of business scope and regulatory requirements. And there's more to come.
Especially in China, we see that, for example, in the insurance sector, the penetration rate for China and intensity of insurance is relatively low. For the more developed nations like Japan and South Korea, banking and insurance sector, they have mature practices that in the future could be exchanged into China. Along with the trading goods and services growth, we would see more international use of RMB in the payments, in the settlement, and even in the interbank clearance.
Lo notes that banks from 8 other RCEP member nations already have a presence in China, along with insurance firms from 5 of them. Given the opportunities opening up, those numbers may be starting to rise before long. Zhang Shixuan, ICS for CGTN, Shanghai.
Now, it has been 1 year since a historic UK-EU trade deal came into force. The agreement, which was signed in December 2020, days before the deadline, sets out Britain's relationship with the European Union from outside of the bloc. That's after almost half a century of membership. Well, Benji Haya reports from Brussels on the feeling in the EU's capital 12 months after the deal.
Christmas Eve 2020, following years of negotiations, finally a breakthrough.
At the end of a successful negotiations journey, I normally feel joy. But today, I only feel quite satisfaction and, frankly speaking, relief.
And where are you going to take this one?
That was the EU's immediate reaction to this, a new trade deal which was implemented exactly a year ago.
Good, well thank you very much everybody.
Until the end of the Brexit transition period, Britain effectively stayed part of the EU's customs union and single market. Yet this deal meant an end to freedom of movement of people and goods. The value of UK products exported across the English Channel fell by nearly half in the first month of 2021. And whilst that has recovered slightly, imports to Europe from Britain are on average 13% below pre-pandemic levels. For many, it's not just about the facts and figures, but their identity. At a vigil held on New Year's Eve last year in Brussels, British expats mourned Brexit. People here compared it to a family separation, a divorce. A year on, one attendee believes it's time to rebuild connections.
Why do we still need to cooperate? Why is that a good thing for the UK? It doesn't take anything away from your nationalism and your identity, but it gives you something in terms of cooperating on the big challenges of the day, sharing information, expertise, pooling, not duplicating, and maintaining rights and standards in so many areas, which is what the European Union is about. And it was never about the EU imposing on Britain. It was about us together working out how to work together and have prosperity and stability together.
Plenty, though, is still left unresolved, notably fishing. It's an industry that accounts for less than 1% of the EU's GDP, but it's politically significant. France is threatening legal action, arguing not enough licences have been granted to French fishermen to catch in British waters.
The UK authorities have to drink Red Bull. They have to speed up a bit because we have been waiting. We are losing money. And it's starting to be hard, even for our morale, for our health.
And then there's the ongoing dispute over the Northern Ireland Protocol. To prevent a hard border with the Republic of Ireland, Northern Ireland was kept in the EU's single market, so customs checks have been imposed internally with the rest of the UK.
Morning, Mom.
Britain's newly appointed Brexit negotiator, Foreign Secretary Liz Truss, is threatening to tear up the agreement if changes aren't made. European Commission Vice President Maroš Šefčovič warns the entire deal would collapse if the protocol was scrapped. The challenge for the EU will be to find a solution that appeals to all its 27 member states, and also to navigate a future without a traditional political ally which in the past contributed billions of dollars to its annual budget. Yet with Britain gone, new opportunities have emerged. Collaboration on defence, a possible investment pact with China, and a reinventing of transatlantic relations as the European Union looks to move on from Brexit. Benji Haya, CGTN, Brussels.
Well, on that note, let's take a look at commodity markets today. Oil prices were up, with Brent crude climbing over 8%. As OPEC Plus meets today, investors expect producers to stick with their planned increase in February, based on indications that the Omicron variant will have only a mild effect on demand going forward. Meanwhile, gold prices climbing above the key $1,800 per ounce level. That's after a sharp retreat in the last session. Now, traders say some investors sought cover from pandemic-led uncertainty, inflation, and of course its effect on the US Fed's rate hike trajectory going forward. Let's take a short break now, still coming up on the show. Businesses in Nigeria look up as COVID restrictions are lifted across the country.
Africa is a continent of diversity, with varied climates and enchanting geography, and a people so distinct, but with a shared enduring spirit. We are at the heart of the continent to bring you the untold stories.
Let's have a look.
We celebrate Africa as it shapes its own destiny.
Tunis, Cairo,
Syria,
Juba,
Johannesburg,
Ethiopia, Tanzania.
Africa Live. Find your voice.
And in Nigeria, restaurants, parks, gardens and other outdoor businesses are reporting good sales this festive season. That's months after reopening following closures due to COVID-19. Now, restrictions on public gatherings by the government to curb the spread of the virus took a toll on them last year, leading to job losses. With that report, here's Tessim Akende.
Atiku Sanki manages a fast food business in Jos. He says they made a lot of sales and profit this festive season, unlike last year when there was a lockdown due to COVID-19.
The response from the post-lockdown pandemic era has been good for us particularly. People seem to be eager to come out and do the things they were used to doing. So business has been good.
Atiku's business is just one of many trying to cash in on the festive season while remaining cautious of the coronavirus. The World Bank attributes 42% of overall job losses in Nigeria between 2020 and 2021 to the outbreak of the pandemic.
Well, the lockdown did actually bad, very, very bad, because most businesses, small-scale businesses, have actually been crumbled, and there were limited need of manpower in most organizations, so it actually did bad.
Economic analysts say businesses in the country would blossom better through credits and loans from the government.
The government should actually develop a model in which they will help the citizens. They can actually give out soft loans to business-minded people, to those that are already in business, so that it can enable them to boost their businesses and they will do well. And the issue of unemployment will be bygone.
The Nigerian government says it is committed to supporting businesses in the country.
The government says it has earmarked nearly $200 million to support businesses impacted especially by the coronavirus pandemic. About 1 million people are expected to benefit from the credit support.
Atiku hopes he will be able to obtain a grant from the government and that there won't be lockdowns in future. And he says he is hungry to expand his business. Tessim Akende, CGTN Jos, Nigeria.
Well, before we leave you today, a quick look at Africa's currencies. South Africa's rand was pretty flat today, holding on to some of the gains made in the previous session. Traders say investors looked beyond the clouds that were cast by the rapidly spreading cases of the Omicron variant in South Africa. Meanwhile, Nigeria's currency continues to plunge to record lows on the spot market, narrowing the gap with the rate that investors and exporters pay for the naira. It has fallen over 2% against the dollar. The official exchange rate is currently seeing its biggest drop since February. Well, that's it for this edition of Global Business Africa. Remember, you can send your feedback to the contacts on your screen. You can also follow us on our various digital media platforms. From me, Uche Okoronkwo, and the rest of the team, thanks for watching.